then you will be able to purchase a home in New York for the remaining balance of your VA eligibility. But please, we are not mortgage loan officers, experts. We are realtors who deal with VA loans quite often. So make sure you verify this information with your mortgage lender. We should have started off with that. Okay, let's start.
Hey everyone, this is Aquontis Garlington here, Monterey County's best new real estate agent, and my parents, who are brokers in Fayetteville, North Carolina. We are starting our new series on loans. We want to make sure that everyone is educated, especially buyers, on the different loans that are offered in this market today. So today we're going to be talking about Veterans Affairs loans, what they are, the benefits, the pros and cons, all the things that you need to know. So obviously, not everyone knows what a Veterans Affairs loan is. So my first question for both of you is, what is a Veterans Affairs loan?
A Veteran Affairs loan, or what we like to call it here in Fayetteville, North Carolina, a VA loan, is a mortgage guaranteed by the United States Department of Veterans Affairs. So it is absolutely not a mortgage loan. It is just a mortgage. It's just a loan that's guaranteed by Department of Veteran Affairs. You get the loan actually from a mortgage company who specialize and has been identified to provide those types of loans to consumers. Anything to add?
Nope, you hit the nail on the head.
And who can qualify for a Veterans Affairs loan?
So anyone who has served on active duty, been a reservist, or is a member of the National Guard, there are some time stipulations on how much time you have to serve in order to qualify for a Veteran Affairs loan. And those questions can be answered through your mortgage loan officer. But the most important thing is that you have to have at least a under honorable conditions discharge. Your discharge cannot be dishonorable in order to qualify for a VA loan.
And can you get a VA loan as an active duty member as well?
Yes, you can absolutely utilize your VA benefits or VA loan benefit while you're on active duty.
And what about?
So basically, if you finish with basic training, and gone on to your first duty in AIT and gone on to your first duty station, you'll qualify for the loan. So basic training, that's the first 6 weeks of your military career, mostly. And then AIT is advanced individual training. That's where you learn your job. So as long as you've basically completed those 2 steps and moved on to your first duty station and you're not getting ready to be separated, then yes, you qualify for a Veterans Affairs loan.
That's great, because I know that here in Monterey, there's the Language Learning Center and a naval base here. So that would definitely help those type of buyers get a Veterans Affairs loan.
Yes.
Now, my next question, which I'm sure you'll have a lot of information on, is what are the benefits of a Veterans Affairs loan?
So one of the benefits that I am aware of, and again, we are not mortgage professionals or mortgage loan officers. We are realtors who deal with a lot of Veterans Affairs buyers. But one thing that's different for VA loans versus conventional or FHA loans is the requirement for a particular credit score. Typically, VA loans, you are allowed to have a little bit lower credit score in order to qualify for the loan than other loan types that are available.
Additionally, which is probably the most prevalent, is no down payment. So for a VA, you don't have a down payment and there's no primary mortgage insurance.
And with the down payment, since you guys were definitely in the military, what would be your advice when it comes to that? I know we've had a discussion before where you suggested that there be some money put down, even if it's just a little, to kind of, I guess, take away some of the costs that it comes with not putting a down payment down at all.
So the VA loan comes with a funding fee. The funding fee is about 2% of the loan. It can be rolled into the loan. So what tends to happen when people do that and they don't put any down payment is they end up with a mortgage that's more than the house. So we always recommend that you at least pay the funding fee and closing costs. Any closing costs you're gonna accrue, you should pay those. But you don't have that typical 10 to 20% down that you would have in a conventional loan.
Gotcha. So the 2% would basically be to cover the funding fee, which is a little bit lower than the down payment for an FHA loan.
Correct.
That's correct. But that's the 2%, 2.3% is only for the first time you use it. So for instance, we purchased a home here in Fayetteville, North Carolina, when we returned from overseas. We also purchased a second home in the same area. The first time we used our VA loan, it was 2.3%. The very first time you ever use it. Second time is 3.6. Second and subsequent times is 3.6%. So that's still comparable to an FHA loan, which usually is about 3.5% is the minimum. But like Ed was saying, it is a part of your closing costs, but it can be financed. And most soldiers, most VA loan beneficiaries do finance that additional cost of the loan. Here, we have a huge turnover with soldiers PCSing and moving. I've heard both sides, mortgage loan officers say pay it, say don't pay it. But for us, if you're not going to be in the home more than 5 years, then when you get ready to sell, it's kind of like buying a used car where you paid too much. So you're kind of upside down in your home because the appraiser said it's $100,000, but your 2.3% added an additional $2,300 onto your loan. So when you're ready to sell in 2 years, because the military said, hey, you got to go to Fort Drum, New York, but houses are only selling for 108. So you've had the house for 2 years, you're trying to get 110 because that's how much you owe on your mortgage, but the market is saying it's only worth 108. So that's the conflict of, do I pay my funding fee up front or do I keep it in my loan and just hope that the market appreciates to where I can recoup those funds? If you can't pay it up front, I highly suggest to all our clients that pay extra on your mortgage to help bring the cost down while you're in the home. If you're going to be in the home for 5, 6, 7, 10 years, you can recoup that fee that's added on when you go to sell it.
Right. So what advice, and I think I may have experienced this dealing with the client here, what advice do you have someone, especially out here in California where prices are much higher, do you have for them when it comes to buying higher price homes?
I would give them the same advice that I would give anybody here is, if you have the money to pay it up front, go ahead and do so. If you don't, try to make at least one additional payment a month or a year, one additional payment a year on your mortgage, because that will bring down the number of payments. You save about 36 months if you pay one extra payment per year on your mortgage.
And then are there higher interest rates when buying higher price homes on a VA loan?
No, the rates are pretty much the same. I don't know. There used to be a cap. I don't think that's the case anymore on how much you can how much you could finance. I believe there are options now for jumbo loans. At one point they were like 500,000 and some change, that was the highest you could go up to. That was the highest the VA would guarantee. But talk to your mortgage lender. But even if you're buying a higher price home, the rate doesn't change. The only thing that changes your rate is your credit score.
What protections do people have when using a Veterans Affairs loan?
So the protection a veteran has when using their VA loan is the VA addendum. That's what we refer to it as. So basically, the language states that the buyer cannot be penalized if the appraised value does not match the sales price. So for instance, if you offered $150,000 for a home, but it only appraised, the appraiser found that the value was only $145,000, you can't be made to pay the difference. So the seller has the option to cancel the contract or reduce the sales price to the appraised value of $145,000, and you guys move forward with closing. In this market right now, where it is a seller's market, the VA loan is not looked at as competitive versus a conventional loan, because whatever the sales price they agree to, that's what they pay, period. They don't have that protection of the VA addendum.
Right, so sellers and buyers should definitely kind of, be cautious, I guess, especially buyers when it comes to using a VA loan, because they may miss out on something.
It depends. In this market, we have had success both ways here in Fayetteville. So some individuals who've used their VA loans have absolutely won the home and paid exactly what it appraised for. But oftentimes than not, what we're seeing here in this seller's market is VA buyers are writing or having attorneys draft up additional language to say that they are willing to pay so many dollars over the appraised value. While the VA addendum protects you from that, you can agree to pay over out of your own pocket. You will only get a VA loan for the appraised value in order to win the homes that they're trying to purchase here in our area.
Gotcha. I know for sure here, like you said, it may not be competitive because of the fact that there's not a ton of military activity here. For myself, I've dealt with 3 buyers that are VA buyers, but I'm very sure the amount of people who use FHA loans or conventional loans probably are much different.
Yes. So I would say about 80% of the purchases here are probably going to be VA loans, and the other 20% FHA and conventional, as well as cash. Recap, the pros are?
No down payment, 100% loan to value, lower credit score requirement, and can be used more than once.
And the cons, your funding fee is financed unless you pay it up front. 0 down does not mean you have no closing costs. You still have closing costs, whether the seller pays your closing costs or you pay your closing costs. And in this extremely competitive market, it can be viewed as less competitive because of the VA addendum protection.
Cool. Well, those are all the benefits, the cons, the pros, and what a Veterans Affairs loan is. Make sure you come back next week when we talk about what a conventional loan is and those benefits.